It's the next market that will be next derivatives market that after the futures market has fully matured will be explored and grown into a full functioning option market. And it's not very mature at the moment. So, for example, if you look at the prices of daily bit, it's it's the biggest option market. It's very obvious that that the trading of the in the money options is not really happening. So it's all out of the money options of people that think that Bitcoin goes to 100,000 or 200,000 tomorrow, and basically betting. It's like betting. It's a form of leverage without the downside, which is the worst way of playing the option market, because you don't do directional bets with options. You do directional bets with futures, and option markets are for volatility. So you sell the volatility when it's high and you buy it when it's low. That's how you ought to do it. But so I guess that will mature, and that will indeed 10x or even more. There is, of course, a big difference with the gold market and several other markets. That is that the underlying, the collateral, the Bitcoin in this case, is very easy to transfer and to verify that it's actually there. And that's not so with gold. So gold is held at I think it's the London Bullion Bank, and then everybody has to trust that bank that the gold is really there. And you can ask for physical delivery, but when things get rough, like right now with all the inflation and then I don't know if you follow the commodity market a little bit, but what happened over the last 1 or 2 months is really amazing, and it's fraud actually on epic proportions, because there were some large investors that traded with options and futures and lost, like billionaire investors, $1 billion positions. They lost, but then the trades were canceled.
Yeah, they just stopped the market, right?
They stopped the market.
Nickel, right?
Trade, wasn't it?
Yeah, and that's not the first time that happens, right? They do it all the time, and that's very bad.
Reminds me of GameStop and Robinhood when they just paused trading on GameStop. I mean, it's crazy.
Same thing.
Supposedly regulated, right? These are regulated, and the crypto exchange is a cowboy.
Yeah, quite literally, right? For example, Deribit is an unbanked exchange, so there are no bank. You can only deposit Bitcoin. You cannot deposit euros or dollars or whatever. So it's very easy for an exchange to actually hold the collateral, and for you to check it. And there's a lot of new trends going on there as well to make that more decentralized. So I think we're going to so Bitcoin and Tuur de Meester, Raoul Pal, several other traditional finance guys have pointed out that Bitcoin is the pristine collateral, the best collateral there is, even better than real estate because it's portable, of course. And that will change the entire market from lending to futures markets and cash and carry trades and option markets. So I guess we get once that market matures, and that will take some time, several years, I guess. We'll be at much higher prices, but also at lower volatility, and then we build on top of that again.
So would you say that the development of the options market, where it's much better to sell volatility or buy it, will have an impact on reducing, as it develops, it'd be a forceful reduction of the volatility, just as futures markets are, taking the heat out of these like exponential tops?
Yes, exactly. Yeah. Because more professional parties will enter that are better at estimating those risks and trading those risks. So right now it's the basically lottery ticket buyers and some institutional sellers that are laughing at the 25% profit they make. While it would be much more interesting if the option buyers are more professional and more into have a real use case for buying those options instead of just lottery tickets. And so there's like with the futures market, there is usually a lot of an entire market behind it, like the agriculture or commodities markets that are for the building industry. So people use those instruments like futures and options to hedge their invoices that they know are coming from stuff they bought, raw materials and stuff, and from the bills they will be sending to customers. So they hedge their positions if they use it professionally, right? They're not gambling on the market. They just know that they can't stand the volatility, and they're willing to give a little bit of the profit away to someone who can hedge or stand that volatility, or has a position that offsets that volatility. It's sort of a natural hedge. And so yes, in the end, I think that will drive volatility down over the next years.
Would an example of that be like, say, you're using Bitcoin as collateral to fund, get a mortgage, you're posting that to get a fiat loan, and that you would use it as an insurance policy to avoid liquidation of your loan?
Yeah, but right now that's very difficult because of the volatility. Your collateral will be like up to X or down 50% in no time, and the lenders will ask for over collateralization, and so that's kind of expensive at the moment. But yes, it will thus make lending based on your Bitcoin on Bitcoin collateral much more attractive if the volatility goes down.
Plan B, sorry to put you on the spot here, but I just want to clarify something in my mind. Like when we're talking about buying vol, is it a straddle or a strangle that you're buying vol?
If you're buying vol, you buy it low. So when the volatility is low, you can buy a call option and a put option, for example. And then when the volatility goes up, you can sell them again and at a higher price and relatively delta neutral. So you bought or sold, could also, right? So you buy the put and the call. But what's much less risky is selling the volatility when it spikes up. So you sell the call and you sell the put, which is more risky, by the way. But because you can sell the call with collateral, with Bitcoin as collateral, but there is no hedge for the selling the put. That's unlimited risk if you're wrong. So, but when there's the volatility pattern can be modeled with Garch models, with all kinds of volatility models, and it's very predictable. So volatility it spikes up, and then it slows down. It sort of it like a fire. It goes down, and you can model that. So when it spikes up, you have to sell the volatility, and then you buy it back later when you know for sure it goes. The spike will not be there forever. So.
Do you think Bitcoin will realize like 60 to 70 vol? I mean, I feel like historically Bitcoin's realized, especially in bull markets, like 70, 80 vol. Do you think, how far do you think that'll come down over time?
Well, I think it's now the 1 year options are trading at 60 or 70 implied vol, which is low because they were like 80, 90 and even 100 and over implied volatility. So, but that will go up again. No worries. It will spike to 100 again. And that would be the moment to put your covered call in, for example.
Gotcha. Appreciate the little education here. I got a book out called Beginners Options Tutorial, something like that, like some basic options book. I gotta dig into it before the options market keeps getting. I keep putting it off.
I have an advice for you, and I might send you something. Maybe I put it on Twitter as well. It's the Black and Scholes model. It's an option pricing model. I know there's a lot of critique and there's a lot of discussion about normality in the market, et cetera, but it's an option model. It won the Nobel Prize, and it has 5 inputs. Make that model in Excel and start playing around with it, and I can send you one. It's quite a big formula, but it's a very intuitive model, and but it's best learned by playing with it and understanding the 5 parameters and the complex interplay between the input parameters in that formula. And it's really nice to understand it because options are everywhere in life, not only in financial markets.